By the end of this video, you'll be able to trade crypto and put your own strategy in place. We're going to look at how to actually analyze crypto and the financial markets in this video, an overview of identifying trends, coming up with ideas on how to capitalize on those trends, and then some of the data and resources that go along with that. It's a big video with a lot of different sections. I'll leave everything timestamped down below. All of the resources that I talk about in this video as well will also be linked down there. The first thing we're going to look at is the different types of trading, and there are many different types, but I've put them into 4 different categories for this video. So you can decide which type of trader or investor that you are and actually use different types of trading on different occasions. So the first type is intraday trading. This is really where you're taking a position very, very short term and you're trying to get in and out within a few hours that very same day. So let's think about what that actually means. What that means is, and I'll go through charting later on in this video, but what that actually means is you're trading on a very, very low time frame, right? So 1 hour, 2 hours, something like that. And you're looking for something in particular to move the price of the asset that you're trading. I'm going to focus mainly on Bitcoin, just as to say a coin, and we're going to look at that, but it works for, any asset. Why would that price change within a few hours? Well, you're going to be looking at a news event or something like that, right? So what we'll look at later on in the video is what moves asset prices. If you know what moves the asset price, then you can actually trade around that news or event. So there is, economic figures that come out, employment figures, interest rate figures, inflation figures. All of this will move prices short term when they come out. So as an intraday trader, all you're doing is trading that news flow and event. So you can have an entry at a certain price, and then you can say, I think that the market is positioned for X, and if Y happens, then the price will move. So if the market is very bearish right here, and it's selling off, maybe the data that comes out or that thing that comes out that will move the price will actually see us just move up a little bit. You can trade intraday like that. So that's intraday trading, and you need very strict trade management, which we will look at throughout this video. Also, I will leave some intraday and day trading strategy videos linked in the description as well that go through that in much more detail, so definitely check those out. Now, the other form of short-term trading is day trading or swing trading. I've kind of lumped them in here. Day trading doesn't have to be over one day, it can be a few days. Day and swing trading is the same thing, right? Again, it's just a news event or some sort of figure that you think will move the price. So what we can do when looking at charts is you're looking at price levels where you say, I think the market isn't pricing in this thing in the way that it should. And so you can take positions on that. But the whole exit strategy for both intraday and day and swing trading is I have an entry and I think the market hasn't priced in this thing that's going to happen. And so when that does happen, this is the price where I think it gets to. So when you're day trading, intraday trading, you are looking for a specific entry price here, and you're looking for some sort of move on that figure. Now, an exit price, you really don't know, but you're looking for a move on that figure, whatever it may be. And when it happens, that's when you start trying to exit out. So if you're taking a long trade, you're entering at a price, seeing that news flow move the price, and where it moves, then you sort of exit. And if it doesn't move, then you exit, break even, or even if it moves against you and you kind of got the call wrong, you have trade strategies in place which stop any massive losses. Again, I've got videos on trade entry, stop losses and everything like that, which I'll link in the description as well. But that's kind of day trading and intraday trading. Now, position trading is slightly different. What you're really looking for here is some sort of narrative shift in some asset. So this is usually a lot longer in time. So you're looking at maybe, a month or a few months, even maybe a year or something like that, where you say, or you do research and you think something is happening now that isn't getting priced in by the market. And I'm actually going to take a position and wait for that to come up. With position trading, what you're really looking to do is really forget about the ultra short term and just take a position on something happening in the future. A great example of this is the Bitcoin cycle, which we've been through many. And so Bitcoin moves in cycles where you get these huge drawdowns in price, then the price rebounds and moves up again. So as an example, the Bitcoin halving happens every 4 years. Maybe you want to take a position 12 months or so before the halving, and then run that through to maybe 6 or 12 months after the halving. Each of those strategies has been very successful in the past, where you have a big drawdown and then the move upwards into the Bitcoin halving and forward. Maybe that is a position you want to take over 6, 12, 18 months. There's also another example here of a position trade. So as another example, Elon has changed Twitter to X, and he's put the X icon here with a Dogecoin icon right here. Now you can see that Dogecoin is actually up 15% on the week. So people are taking positions here, right? They're not saying that they want to make 10, 15%, or they want to trade intraday on some news. They're saying, we're going to take a position and go long Dogecoin because maybe he's going to integrate it into X. That could be maybe 6 months or 12 months. I don't really know. That's more of a position trade when you're saying maybe the market is going to reprice this asset over that time. So some sort of news event or flow or something happening far out into the future. The last sector here is investing. This isn't really trading at all, but I believe that all traders should also be investors, of course. This is really much longer term. So what you're actually doing here is simply just swapping fiat currency into assets. What exactly is an asset? What is a thing that is growing over time, right? So you have, many different assets. You have individual stocks like Tesla or Apple. You have indexes like the S&P 500 or the NASDAQ. And then you have maybe Bitcoin, which is seen as this kind of world diversified money. Now, I see Bitcoin actually more like a financial index rather than one individual asset, because it really is just a decentralized network. And so what it really acts as is a financial index, much like the S&P. And so in good times, you'll see prices rising. In recessions and bad times, you may see the market trying to price in, worse economic conditions. Now, investing is about swapping an amount of money each month into assets that grow over time. So that is very different to trading, but I believe this is often overlooked by a lot of people looking to make money in markets. If you think you're going to be alive for the next 5, 10, 15 years, it's good to have a plan for that. Investing can really grow your assets exponentially over time as you reinvest profits. And this stuff, the intraday and the day and the position trading, can be something where you can make extra profits with a portion of your portfolio. In terms of portfolio construction, how much should you put towards day trading or working to earn money essentially? And how much should you put towards asset investing? For me personally, I believe this much should just go to investing and investing in assets over time. And then you can choose an amount that you actually actively trade with. Every individual is different, but when we're looking at cryptocurrency and Bitcoin, if you're a long-term investor, 5 or 7 years in this thing is growing over time, and the price is going up over time with cycles in between. But if you're investing over 5 or 7 years, you've been buying at 4,000, 12,500, 5,000, 7,000, up to 20,000 maybe. Whatever it is, your dollar cost averaged price is a lot lower than it is now. So you've made a few 100% on your money. Now that's great psychologically as well, because if you have an investment portfolio that is in good profit, then you don't get as desperate to make money from this stuff. And portfolio construction is important because when you're trading short term, you need a specific strategy of why am I entering here? What is the trade idea? And when do I exit? And how much can I lose if I get it wrong? That's it. It has to be completely unemotional. And so if you're in a decent position on this stuff and actually earning money, you're in a good position, you can actually trade with the active trading money without the emotion, which is extremely important psychologically when you trade. Now I want to get into some specific tips if you are starting out trading on how actually it works mechanically, how to go ahead with trades. So the first thing, we do need a crypto exchange. If you don't have one yet, just go to CoinGecko, exchanges, crypto exchanges. You can see the most popular exchanges by trading volume. Now, trading volume higher means the exchange is used by more people, and so typically probably a higher quality exchange, but not all the time, of course. What we can do is look at each exchange and see what assets they hold. If you go to Binance as an example here, you can see exchange reserves. What a lot of crypto exchanges do is cryptographically prove that they're holding the assets they say they are. And that's important because a crypto exchange should segregate all of the business assets from their customer assets. And so the customer assets are just sitting there, waiting to be withdrawn. If a exchange cannot prove that, then something fishy might be happening. So always look for that. The proof of reserves is very important. And of course, something like Coinbase here, they're a publicly listed entity. So nothing fishy is going to be happening for the most part because they just can't do it. There's too many eyeballs on them. So choose a trustworthy exchange with decent fees. I personally use Binance and Bybit for the most part, but there are many other good ones. I'll leave links below to a bunch of them as well because they often give deposit, trading bonuses, etc. So you can see all the links below and the different bonuses as they are. Once you've chosen an exchange, what we'll do is look at trading. So again, I'll leave some videos, step-by-step guides in the description, which show you how to get fiat currency on and off, how to deposit and withdraw, and how to trade in huge detail. But essentially, what you're doing when you're trading crypto is you're selling something, which is usually your fiat currency, so dollars, pounds, euros, selling that, and you're buying a crypto asset. So essentially what you're doing is going short fiat currency and going long the crypto asset. So you're saying that over the period of your investment, whether that's a day, a week, or 10 years, over that period, you are pretty confident that that asset is going to go up in value in comparison to the thing that you're selling. So let's go to trade here. We're going to go to spot trading. I'll explain the difference between spot and futures in a second. We'll come to BTC here. So as we can see, a trading screen simply gives us the ability to sell one asset in order to use that value to buy another asset. So usually we use stable coins. Stable coins are a crypto version of a fiat currency. So what you can do is take the value of your fiat, you can deposit that onto a platform and either use that fiat currency directly or switch it into a stable coin, whichever is easier on the platform, then you can sell that into the crypto. So with every trade, we are selling something to buy something else. So when we look at Bitcoin and the price of Bitcoin, it's always valued in dollars. All crypto assets are valued in dollars, as is most else in the world markets. So when we call Bitcoin at 29,000, what we're saying is one BTC is worth 29,000. You can trade any specific amount of Bitcoin. You can trade half a Bitcoin, 0.3 of a Bitcoin, 0.001 of a Bitcoin. It doesn't matter. So we quote the price in 1 unit, which is 1 BTC. We can trade any fraction of a unit with crypto. So what we can do is sell one asset and buy another. Usually, most of the time, most people will trade US dollar Tether against Bitcoin or other crypto assets. Tether is the most successful US dollar stablecoin, but as you can see on Bybit, they actually do let you trade fiat currencies directly as well, or I should say just one fiat currency, which is the euro. So if you have the euro, you can switch that directly into US dollar Tether, and then from that Tether, you can switch into other assets. There are many different exchanges out there, but each individual trading platform is basically the same. It just gives us a few different options to go ahead and trade. So the first thing is choose your trading pair, whatever that may be. And then we come over to the market here. The market is trading right now at $29,214 per 1 BTC. And so we have options to either buy or sell, and then how much we want to buy or sell. So what we can do is put an order price in. We're going to use a limit order here. A limit order is an order where you tell the trading system exactly what you want to do, how much you want to trade, and the price that you want to trade at. So we're going to put in an order price of 29,200, and we're going to put a quantity of BTC at 0.05. So as you can see, now I've put an order price and a quantity in. The order value is 1460 because it's the order price and then the amount. So that's simple. So if we had this in our account, we could go ahead and buy BTC here. Now, as you can see, my limit price is currently below the actual market price for BTC. And so what's going to happen here is that the system will take my order in and it will say, I've put your order down here on the order book. And once the actual price of BTC meets your order, you can go ahead and trade. But for right now, your order is too cheap, and so you can't trade. So that's known as a limit order, and you can press buy BTC and that will come down here in your open orders. What you can also do if you just want to buy straight away is press market. The order price goes away and you just put an amount of dollars that you want to spend in. What will happen here is that the system will go and get the best possible price at the time that you press the button, which currently is 29,214. So you have sellers and buyers and you can input your order prices here. Now, what you're doing is selling one currency and buying another. So what you're saying to yourself is, over the period of my trade, I believe that the thing I'm buying will actually rise in value versus the thing that I'm selling. Now, depending on your time horizon and the type of trader that you are, there are two main ways to trade cryptocurrency. The first is what we've been looking at, which is the spot market, and then there's the futures market. So this is the spot market. Spot means cash settled. So you physically settle and own the assets that you're trading. So in the spot market, you take actual value that you own, for example, cash or stable coins or anything, you swap that with a seller and you physically take custody of the assets that you're buying. So it's cash settled, meaning once the trade has happened, the assets are transferred to your account. You can sell fiat currencies to buy crypto, and you actually physically own those assets. You can withdraw them from the platform, and they are your cash bearer assets to own. Now, the other side of this is futures trading. Futures trading is much more for short-term trading, speculating. Spot trading, if you're an investor or you're swing trading, then you can trade in the spot market. Spot market is you actually need the value there to buy first. Once you have the assets, you can sell them later, hopefully for a higher price. In the futures market, this is known as a derivatives market. And the reason it's a derivatives market is because this is actually not the crypto at all. So what we're going to do is go to derivatives, and then we're looking at Bitcoin against US dollar tether, but we're actually trading a futures contract. So what this really is a synthetic contract on an exchange that tracks the price of a cryptocurrency. So when you trade this, you are not owning the crypto, you're not taking custody of the crypto, you can't do anything with the crypto once you have a position. What a futures market does is let short-term traders speculate on the price of an asset. So you have Bitcoin futures and Ethereum futures and many other crypto assets. You can take positions on the price. So it's a synthetic market. It's not for investing because there are certain costs associated with this market as well. It's for short-term trading where you can take a position on the price alone. You have to open and close a trade to make either a profit or a loss. You do not own the underlying asset. You swap the value of the trade between when you open and close that trade. Now with futures as well, because these contracts are synthetic, you can do anything that you want. So you can actually use leverage where the exchange gives you a loan. So let's say you put $1,000 into your account. You may be able to open a position that's worth $5,000. The reason is because you have collateral and cash there to fund any potential losses. So the exchange is happy giving you, 5x leverage. Say, yeah, open a position worth 5,000, no problem. If it falls 20%, we've got your $1,000 to fund the loss. No problem, we'll close your position. So it's very, very different. So futures is for day trading or short-term trading over a few months. But if you're investing, you have to buy and own the assets. There's many reasons why traders will use futures. They're often cheaper to trade than in the spot market, so you get lower trading fees. They're also just a product specifically designed for day trading, so they're very highly liquid. They're very cheap to trade, and you can take a position on the price. So with futures, as you can see here, you can buy and go long. So you can actually buy first and then hope to sell higher. But you can also take a short position, which is where you sell first and hope to buy back lower. So you can take a position where you benefit from the price going up or the price going down, and you don't need to own any of the underlying asset. This is just simply a synthetic trade of the price of BTC between you and another market participant, and you're trading the price of the underlying asset, which on this occasion is Bitcoin, but you can see other assets you can trade in the futures market as well. Trading futures requires at least an intermediate level knowledge, in my opinion, definitely not for beginners. If you do want to learn more about it, the crypto course that I have actually has a specific futures section. So this goes through actually trading futures themselves, including how to use margin and leverage responsibly, how to actually calculate how much risk that you're taking, and also where your stop loss should be in terms of what's the dollar amount that you're risking what's the risk and reward for the trade. You can see that strategy here. I lay it out step by step with some day trading strategies, stop loss strategies, as you can see here. If you're more of an investor, the crypto course has about 300 videos that go through the entire thing. I'll link it below. You can come into the Discord groups and ask me questions as well. Link below for that if you're interested. Now I want to come into some trade ideas and how to formulate these. The basis of any trade idea is I want to enter at a price that I think is going to make me money. So enter at a price and then the price moves up, I sell and I make that money. Or if you're taking a short position, you want to sell at a price and then obviously buy back lower because you think the market is mispositioned. The basis of a trade idea is something has to happen in order for the price to move. So that's a bit of news flow. It's an event that the market has forgotten about short term. They're worried about something else and you actually think that's irrelevant. Now that happens all the time. That is the basis of a trade idea in my opinion. Now there are two major ways to think about this: macro versus micro. Do you have macro trade ideas versus micro trade ideas? And so these interact all the time. Now it's easy to make it sound easy, but obviously this is immensely difficult. But let's go through some examples here. So macro trading, we're looking at currency strength. Now remember, all crypto assets are traded against the dollar. And so really what you're trading is the strength of the asset versus the dollar at all times. Now, as we know, government and central bank policy will change the value of fiat currencies like the dollar. If they're raising interest rates, the dollar gets stronger. If they're cutting interest rates, the dollar gets weaker. How will that affect the asset that you're trading? Generally, in macro, long term, we know that currencies debase. So if you're investing in a strong asset like BTC, you're expecting that to go up in dollar terms over 5, 10, 15 years. But that also happens within very short-term cycles as well, with something like inflation or unemployment as those cycles change. So let's look at macro first. What we'll look at is the price of Bitcoin here. And we're just simply looking at the Bitcoin cycles. I'll list this website later on in the video with all of the resources. But what we're very easily seeing here is there are cycles of Bitcoin where the price gets sold off and when the price strengthens. In general, the long-term trend is an uptrend with cyclical patterns of boom and bust within BTC. So what we have here is the busts of BTC where it's sold off. We can see this moving down into the green zone. So a macro type of trade over maybe 2 to 4 years would be buy when the price is low within the secular uptrend and then sell during these bull markets. So that would be a trade idea. So we'd come back to the chart and see, where is the price low during these times? Well, we've had a low here during this bear market and a low here during this bear market. When you get the recoveries, maybe that is a trade idea looking at, those different cycles. Now, Bitcoin is a macro asset, and so it's essentially a mirror to the macro. So currency strength, employment and inflation data, and central bank policies tend to move in cycles, and Bitcoin is just a mirror of that. So Bitcoin is the macro. Now let's look at a different example here in terms of the macro that could have a trade idea very short term. So when you're looking at Bitcoin cycles like this one, this is probably a 2 to 4 year trade, a position trade over time, right? Trying to take advantage of a Bitcoin cycle. But there's also a different type of macro that you can trade, which is, and I'll leave this in the description as well, this is the FOMC meeting. So the Federal Reserve control the price of dollars, right? They control the price of money, and money, the strength or weakness of the dollar itself will affect asset prices. So when they come out with statements or interest rate hikes or cuts, that is going to affect the price of assets. What you can do here, as of making this video, July 25, 26, is a meeting from the Fed, so we can trade that. Is the market offside? Has the market priced in something that you think is actually a little bit wrong? Is the market weak and you think that the Fed rate hike decision or the rhetoric out of them is actually going to be a little bit more dovish than the market's priced in? That is a trade idea using macro and data in order to take a position in the market. You might be right or wrong, doesn't matter, because you put your entry in and your stop loss in, which I go through in other videos. Crypto Investor course goes through that. Other free videos on YouTube go through that as well. Now, an example of a micro trade would be using industry specific news or even coin specific news that you think the market just has forgotten about or hasn't priced in properly. So if it's on a smaller coin, there's no guarantee that a news event will push the price of that coin, although it often does. It doesn't always happen. So as an example here, just for Bitcoin, you can see the ETF applications from BlackRock and Fidelity. This is a major micro event within the industry. It's not got anything to do with the macro, but a lot of events around this are going to move the price a lot. So BlackRock and Fidelity applied for ETFs, and what that did is drive the price of Bitcoin up. So the ETFs were actually around here. You can see the price moved a lot. Now, what's going to happen after that kind of exuberance dies down is you may actually see the price fall off a bit, because the news flow moves on to something else. There's not a lot of news flow here, but it's important as a trader, if you're looking at micro events to trade, is what are the dates, right? So we can actually find out the dates. All of the dates are online. You can see that the middle of August, as I'm making this video, about 6 weeks time, there's a decision on another ETF that will probably get pushed back, although we don't know. So it's a trading event, right? So a micro event is either fundamentals that you can see something happening on chain that is changing. I'll go through some resources in a second, and then news flow that drives speculation. This is industry specific. So ETF applications are going to be a big news event when they happen. So maybe you think that they will be accepted and that this price is just wrong, and so you take that position. Maybe the macro drives us a lot lower, and you're actually thinking the market has forgotten that in a few months' time, something might be accepted. Maybe you think the actual applications right now are going to be delayed, like the decision on them will be delayed, which is quite likely, and the market is in no man's land up here. The market is too bullish, and the market will kind of FUD, right, and sell off when that news flow comes out. That's actually an opportunity to buy, to wait 2 or 3 months when the news flow turns positive again. So macro versus micro, you can focus on one or the other, but it's just a trading idea. You need some sort of news or event that you think will push the price to a certain level and that you can enter at a different price because the market is focused on something else. Now I want to look at identifying trends on charts and how to analyze price action over time. So you can do this on any asset that you want. We're going to have a look at BTC here. So the first thing I want to do is come to TradingView. Now, if you don't have TradingView, just sign up for an account. It's completely free to use for the most part. There are some paid options there. You can have a look at it yourself. I'll leave it linked in the description as well. Sign up for an account with an email address only, and you can use the charting software. So we'll come to Bitcoin here. So just search Bitcoin up in the top left, search for BTC USD. You can get the index right here, which shows you the Bitcoin chart over time. Just going to right click and take off all the drawings. So remove drawings. And this is the Bitcoin price since inception. So what we want to do is come down to the bottom of the chart, click this option here, the settings option, go to logarithmic. If you're looking at longer term price action and longer term trends, you want to look at logarithmic charts. If you're looking at technical analysis and actually entering orders, you might want to look at the regular chart. You can see that's very different in terms of the price scale on the right-hand side. So the logarithmic chart really charts very long-term trends over time. So we're just going to reset chart view here, zoom out. So now we have Bitcoin over time. So as you can see, this is what's known as an asset with secular growth. Secular just means long-term. Why? Well, look at the price chart from 2010, right? And it's now just kind of going up. But you can also see within the price chart many different cycles. So the difference between secular and cyclical, you can take advantage of this as a trader. Bitcoin is really a macro asset, and so it is going to tell us what part of the market cycle that we're actually in. When Bitcoin is in a bear market, taking a lot of speculative long positions in altcoins is probably not a good idea. However, when Bitcoin is grinding higher into bull markets, that's when long positions and trading off positive news is going to be a lot better in terms of a risk reward for you. So what we can do here is come to the left-hand side of the chart, click on this icon, and we want to do a curve right here. So you can just pick an area on the chart. I'm going to miss out kind of the 2010s and 11s era, but we can draw from one part of the chart to another and a curve that kind of charts this growth over time, right? So what we can see is that the logarithmic regression of Bitcoin is that it's in a massive secular uptrend, and you have these bull and bear markets in there. I'm just going to copy and paste that there, that line, and fit this onto the chart where you see kind of a mid-level, right? So somewhere around here. And then you might want to do it again for the upper end of things. Now this upper end is where the price gets far ahead of itself. So just with 3 simple lines, and this is not accurate, right? But just to show you, we're seeing that when the price of Bitcoin gets up to this level, that's really the top of a bull market. And so just from a cyclical perspective, just not even looking at the price, but if it comes down to this lower level, these are typically areas where it's a great time to purchase if you're a long-term investor. And these areas are typically areas where the chart is way, way overdone, right? And somewhere in the middle is kind of neither here nor there. But what you're seeing is an asset that has secular growth over time. So despite bull and bear markets and huge price drawdowns and volatility, you're just seeing that over time that asset is moving and actually gaining in value versus dollars. So that's one way to actually analyze a chart, which is looking at trends over time. So we can do this with other assets as well. So we'll look at the NASDAQ 100. Maybe you're an investor, you have Bitcoin in your portfolio. You just want to know that it's growing over time, right? And as we can see here, the NASDAQ is very similar, where you have bull and bear markets and you have ups and downs. But what you can see is, you have a midline, which is the the normal growth trajectory. And then you have areas where the price gets sold off. Now, if you're investing in an asset with secular growth, and this thing is just over the long term getting more expensive in dollar terms because the dollar is debasing and it's like an ice cube, plus you have growth in the asset class, you can see whenever you come down into this lower level is a buying opportunity if you're a long-term investor, right? So this is about investing, not trading really, but hey, if you want to buy more at lower prices, people think that they extrapolate these things down to crazy levels, but you can just see over the long term, secular growth assets have bull and bear markets, and there are better times to buy, which is when you come down to the kind of bottom regression channel, and there are worse times to buy as well when you get up to the top regression channel. Looking at these cycles can actually help us a lot with day trading or swing trading as well, because now we know for the most part what part of the cycle that we're in, right? So it's a cyclical asset, and Bitcoin is a macro asset, and so it's going to show us what part of the cycle that we're in. It looks like we're climbing out of a bear market now, and it's representative of the macro economy, right? But you also have growth in the asset as well. What we're going to do is change to a regular chart. We're just going to remove drawings here, and now we can actually do some TA on the chart as well. So what we can do from a price perspective is search for on the chart areas where the price is rejected away from. So we're going to check our line here, and we're going to do a horizontal ray. So what I'm looking for is price levels where you get a rejection. That is a rejection right there. That is a support level because the price came down and was rejected to the upside. That is a support level. What we can also see is this area here was a support level in the bull market. So you got a sell-off and a rejection and move upwards, a sell-off and a rejection and a move upwards. And then obviously that support level broke here. But we also see that on this occasion, we have a resistance level and a resistance level. Why is it resistance? The price is moving up, but it got rejected from this price level twice. So support and resistance can be traded against, and they are always broken at some point. But it's good to understand what your trade idea is versus how the market is positioned. So what we're going to do is go to our horizontal ray, and we're going to draw on key support and resistance levels. The first one near our timeline that we're actually trading is this one right here. This is a key level. So I'm going to press Command just to stick myself to that candle and then press that line. This line is important because over the short term, it was resistance, and it was resistance, and then it broke through to the upside. When you get a breakthrough of resistance, this is fairly bullish price action. What we're seeing is a breakthrough of resistance to the upside, a retest of the support now, and it bounced to the upside. This is bullish price action. What you're getting is a breakthrough of resistance, a retest, and a bounce. That is really an uptrend, right? Where you're getting these drawbacks and then the move upwards. So this is potentially an uptrend. So this is a support and resistance line that's very important. Now what I want to draw as well is another support and resistance line. What I'm going to do is actually go to rectangle here and draw this, because up at this level, there's a lot of trade and it's over a very big price range. But I can definitely see that this area is a huge area of support and resistance. What I'm going to do is draw around this level here, because we are currently getting rejected off this level. So I'm going to draw this around here, and I see this as just a huge level of kind of resistance to the upside, right? Why is it resistance? Because it was support in the bull market. What you really have here is just a lot of traders that were trading and have positions around this price. This price is around, call it 32K. So you have a lot of traders who are stuck with their trades at these prices. And so there's going to be more resistance around those prices. So if you think about it, what we've done is we have a huge sell-off, we have a bear market, we have a support level with a clear recovery. But now we are at a price level where we are at a major resistance zone. So from a short-term perspective, it's extremely difficult to break through this, because there's just a lot of traders that need to reevaluate their trades and get in and out of positions at that price level. And so when you're looking at either macro or micro, you're looking for some piece of news that is large enough to actually break through this level. And so that may be the ETF applications, it may be employment news or something else from the Fed or something like that. So whatever your trade idea is, it has to be big enough to break through this level. So the example we've used with ETFs is the ETF application and speculation drove us to an all-time or a yearly high for BTC that, if you can see right here, got rejected. And so we're moving back down. So a trade idea or point of view is, let's actually wait for that rejection to happen and then actually speculate on those ETFs getting some good news maybe later on in 6 months' time or something like that. So trade ideas have to be associated with some sort of technical analysis where the price is going to break through a certain level. What we're really looking to do with technical analysis is actually get better entries for our trades. So we're using two things right here, which is the price and the price action versus the time aspect of the trade. So that event that you've decided will change the price, you need to have a price target for that or something that will happen, and then make sure that you aren't caught on the wrong side of a trade. So with the ETF applications as an example, people just speculated on that, drove the price up, and now what you have is people that are late to that trade getting caught at this price, and they are getting wrecked because they bought in at a wrong price. The price was wrong, right? The move had already happened. They were late. They're taking long positions at what we know as a resistance level, and so they're kind of stuck in that trade. So you always have to be one step ahead of the market by saying, where is the price now and what is the news flow over the period of my trade that will actually change the price? The only thing that the price could have done at this level to break through this resistance is have an immediate ETF application approval by the SEC and it goes to a new high. But if that's not happening, then that's actually not the trade to be in. Maybe what we want to do, the time aspect of the trade, is to wait for price action to be more appropriate for us. So as we know, if the price does come down to around this level, anywhere here, that's a much more appropriate place to take a long, given that we know maybe there will be some good news in the future. But you have to look at all of the potential news that comes out. So if you are trading ETF applications, is there going to be a rejection or a delay or something that will FUD the price further? And at what time do you think that the market is cheap enough to actually take that risk yourself? So maybe if the price comes down to 25 to this support level, you're actually happy to go long and take a position anyway, because you think even if the FUD does come, the price is actually lower than it should be. So that's what you're trying to do all of the time, is stay one step ahead of price action, where the level is, and then if the price is over or underpriced by the market, and trying to take advantage of that, trying to stay one step ahead of the market. It's obviously very difficult, which is why trading is a lifelong journey. I have much more specific videos going into trade entry, how to enter trades, where to put your stop loss, how to take a certain amount of risk in dollar terms that you want to take. I'll link them all below. I go through it step by step in the Crypto Investor course as well, so check that out. All of the resources for this video are down in the description. I'm James, as MoneyZG. Cheers for watching, and I'll see you in the next one.